Hello, welcome to Syndicate Trading Hub, and this is Louis Damson. And today we are going to talk about value. Okay, how to identify value on your chart. And if you're a trader, you cannot be just trading from anywhere that you see the candlesticks moving up and down, that you see price. You cannot just jump anywhere. Okay, you need to have an edge in the market that will ensure a high probability of success. Okay. So you cannot just enter the market from any point that you feel like you want to enter market, or you feel like the price wants to go up or wants to go down. No, you need a value area. You need a reference point that price has already reacted to and price respected. And the market never forgets. So when there's a point or a turning moment in the market, or price turns at a certain point or at a certain price, the market remembers that price. And when the price gets there in the future, it reacts, okay, not all the time, but sometimes or most of the time it reacts, and there's a certain reaction because depending on where the value is, whether it is forming a support or is forming a resistance. Okay. So when price is falling, price needs something to hold on to. It needs something to support it. If not, it will fall and it will collapse. And if the market can crash, okay. And if the market crashes, there will not be trading and our industry will not exist. So it's put in such a way that price has to get a support and price can also go too much because it's like inflation. Okay. When there's a lot of inflation, you see that the prices of goods and services they go up a lot. And if it skyrockets to a certain point, like what happened in Zimbabwe, that they were selling just a piece of bread for about um, $1 million. Okay, that is a serious inflation. And what happened? People were hungry. The economy was crashing. Okay, so price cannot be allowed to rise too much, and it cannot also be allowed to fall too much. So we have some points in the market that when it reaches, it prompts market participants to enter the market, especially the other time frame participants. They say the swing traders, the position traders, and the investors to see value and enter with whatever value that they are seeing, whether to help in reducing the price or to increase the price. So when the price is going overvalued, okay, even the market feels that the price is overvalued. Sellers enter the market to sell and bring the price down. And when the price is seriously undervalued, okay, the buyers enter into the market because they see value, they see that the prices are low, so they can buy. So because of that, okay, there's always the price moves up and moves down. So sort of like a sine wave, okay, sort of like a sine wave that the price moves. So it's like a wave. So the price moves up and down. So price is not stagnant. Price doesn't just follow one linear direction. Like price is um going just down, 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 down. No. Price, you see that price is a sine wave. Okay. It goes up, comes down, goes up, comes down, goes up, comes down, goes up. And that's what makes trading difficult because you will not know where price is turning and at point at which price will turn. So maybe you want to enter the market here and sell, but the moment you entered, price comes down, goes up, comes down again. Okay. So that makes trading difficult. And to make it easy, you will need a value area. All right. So that is what I'm going to teach you today. And I'm going to teach you support and resistance, the traditional support and resistance. There are other powerful price values that um, we have that we use with some the Camarella equation, the floor pivot, the CPR, we have the money zone, we have the when you go to the smart money people, they have the fair value gap and the liquidity sweep and all those things. Okay, but we are going to do since you are beginning, I want to just show you value, okay, and certain points that price reacts. Okay, so when you want to go further, you can try to look into the others, okay, which are Very, very important. And I even have a course on a lot of the value areas and how to point price, how to know the exact point that price will react. The very powerful levels, the Camarilla equation, very powerful. Okay, and there's a course on that. That's if you want to go more advanced. Okay, but this doesn't mean that what I'm showing you doesn't work. It works. You can use this to profit, but there's a level that you can get to, and that's where the master class comes in. All right, so let me just go into it. So I was talking to you about support and resistance, and I'm saying that you can find value, okay, on your charts, okay, and it will show you what to expect or how to play value, whether you are supposed to buy or you are supposed to sell. And I'm repeating again, you cannot just buy and sell at any point in the market. You need to locate value. And when you locate value, it means that other traders around the world are also seeing it, and they also see that there's value there, and they will help you and they will enter the price. If you are the only one that sees value, you will lose the trade. You should have value areas that most participants are seeing so that the force will be high, so that people that have money will also see that value and they will enter. And you are just riding on that wave. Okay. That's why the Camarilla equation is very powerful, because the institutions use it. The the big boys on the investment banks in America and all around the world, they use this kind of value areas to locate where they are supposed to enter the market. And if you are in the market, you need to know where the big boys are entering. And the Camarilla equation gives you the perfect levels that the the those guys are entering the market because they use it. Okay. And that's what I've made it in a video. That's not in this video, in another video. But that one is a premium. That one is a premium course. Okay, which costs very less. With the value that is being given, it costs less. All right. So let's continue with this. So if you want to just find value, okay, the fundamental way, which works very much, because sometimes the market just comes down to the basics, the how simple it is, all right. So you just come to trading view, okay. When you come to trading view, you see the cross over here, the second one, which has the line, okay. You click on it, all right, then you go to horizontal line, all right. So when you go to horizontal line, now what are you looking for? This is a weekly time frame. So when you are drawing support and resistance, you don't draw it on the lower time frames. Okay. So you see that it's on the weekly time frame. We don't draw it on the lower time frame. All right. If you draw it on the lower time frame, so you have the time frames as I showed you in the other video. All right. So 5 minutes, 10 minutes. You don't draw support and resistance here because there's a lot of manipulation here, and there's really no value over here. So you switch to higher time frame. All right. So you can, if you are in doing intraday, you want scalping, you can maybe start drawing your points from 1 week. All right, from 1 week. Okay, so that's where we are. So we have chosen 1 week. We may go to 1 day and check. Then we may do a top-down analysis. All right. So that is the basicity of the market. All right. Let me delete this. All right. So let me select the horizontal line. Then when you want to draw support or resistance, okay, you look for the points, the sharp pins. When you see the sharp edges, okay, see these sharp edges. All right. That's what you're looking at, these sharp edges. That's what you're looking at. And you're looking to draw a line that can touch two or three or four. The more it touches, the stronger it is. But don't draw a line and it will touch only one. Or maybe just with two is maybe okay. But the more it touches, the better. All right. So, and you should draw it closer to where the current price is. This is where the current price. So you can see that if I like the edges, the rifts, okay, you can see that it's touching more. I can draw some here, but it's too far away from price. Okay, it's too far away from it to get. It will be a long time. I want the one that is closer to me. All right, and that is what I want to, you know, that's what I want to work with, so that I will not be all over the market. I want to draw the one that's that closer to me so that I can engage the market. All right. So when I put my mouse here, you see that it's touching. Um, you can see that it's touching one, two. three, four, five, six. So that this is a very powerful. So you see that when let me draw it first so that we can have a look at it. So here when I draw it, let me change the color to something like green, okay? Because support we make it green, all right? So now you see that it touched here, the market responded. This is the second time, this is the third time, fourth time, fifth time, sixth time, seventh time, eight, nine, 10. Now on the 11th time, the market remembers. So when it got there, it turned. When it gets there, it turns. That is how powerful it is. All right. This is the traditional support and resistance. So when the market gets there, it turns. When the market gets there, it turns. Okay. And when the market comes later in the future over here, the likelihood that it will turn is very high. Okay. So you draw that one, you look for another one, you look for another one. Mostly you have to get support and you have to get the support, you have to get the ceiling, which is the resistance. So you go there. All right. So let me look for another one. Okay, there's another one here, which it touches. Okay. So you can see that it's touching it. Okay. It's touching. Okay. So this is good. So let's look for another one. Okay, I think I have another one here. It touches here. It touches here. Okay. It touches here and it touches here. All right. Let me look for some resistance. And this is also a good resistance, the all-time high. Let me change it to red. Make resistance red to separate it. All right. It touches here, touches here. Okay. There was a touch here. There was also a touch here. There was a turning point here, showing that it's a powerful resistance. Okay. Then I can see another one too down here. All right. Yes, I can see another one too down here. It's because it's weekly, so you think they are close. They are not close. All right. Okay. So when I'm done with the weekly one, okay, these are strong resistance that when price gets to on your lower time frame, it can easily turn. So then I move on to the let me move on to the 1 day. Okay. I'm moving to the 1 day and let's see what it shows over there. So this is the daily time frame. All right. So I'm switching to the daily time frame to see if I can get more support and resistance. All right. So let me squeeze it because every time you have to squeeze it, okay, so that you can see more. Because the more you see, the better. Okay, so I'm squeezing it. I just want the sharp edges. All right. I just want the very sharp edges so that it will touch several times so that I can see what price is doing. Okay. Okay. So I'm looking for the sharp edges. So I have to compress the information together. All right. So now we are looking for price to react to this. If price forms of at this, it can easily rise. So we are looking for how price will react to this. Okay. So let me see if we can get another one here on the daily time frame. So here, if you get something here, you may easily um try and okay, I think there's one here too. Okay. There's one here. There's one here. All right. Yes, there's a value here. So let's draw it. Let me take there's one value here. Okay, there was is let me draw it. All right. Okay. And then let me see if there's another value here. No, this one is not really a serious value. All right. So that is it. Okay. So now we have, but this one is below, so I have to change it to green. All right. Then maybe let me change it to slighter green so that I can see the difference. So this is daily, okay? And this is weekly. So the weekly ones are stronger. So I've changed the color of the green to another shade. All right. So let me drop to 4 hours and see what is happening there. So half hours, let me go to 4 hours and see what is happening there. All right. So this is just normal support and resistance. Okay. Normal support and resistance that we are trying to draw. Let me see. Oh, my internet has changed. That's why. Okay. So let's go to 4 hours again and see um what price is doing. Okay, it's coming now. So let's go to 4 hours. Okay, so when you look at the 4 hours, you see that the price is acting beautifully. You see, I drew it on a weekly, okay, but you can see how on the 4 hours price is acting beautifully on it. It really works, okay. See how it is forming on it. So in case price just moves down here, the likelihood that it will jump on this and go up is high. All right. The likelihood that the price will jump will come here and maybe react from here and go. So when price gets here, all right. When price goes and it maybe it comes down and gets here, you are very attentive to see if there will be a reaction. Okay. There will be a reaction that there will be a buying like what happened here. Okay. It will come and leave a wick like this and buy. Then you are hoping to take it to this resistance. But if nothing happens and price gets here, they are looking for a reaction to see if there will be sign because we sell at the resistance and we buy at support. All right. So you are selling at the resistance. So that's why it's red. Red is selling, okay, and green is buying. So when the price gets here, but one thing about support and resistance is that if you have a resistance and price is able to push through it, then the resistance that is left behind now becomes a support. It becomes a support for price, okay. And when you have a support, okay, like here. Okay, you have a support like this and price breaks through, then the support that is left behind becomes a resistance. So if you can see here, price broke through this resistance. Okay, now as price broke through this resistance, sorry, this support, now it became a resistance. So when price came, you see that it resisted it, then it bought from here. But when you go to this the previous support that has now become a resistance, you see that it resisted it until it broke through and it became a support. So we are waiting to see that, and that is the actual reason why we are trying to see. So you have to be very attentive when price is getting to a support or a resistance because that's where value is. Okay. So now we switch to let's say 30 minutes to see how on the lower time frame how it is happening. So if you are trading, okay, you have this movement, it goes, comes back to retest, and it retests successfully like this, then you have yourself a very serious movement. This is a very bullish momentum. Some people will call it the V shape. Okay, sorry, the W shape, which shows but I have a way that I teach the psychology behind this. I don't just let you cram um shapes. Okay, when you see visual, I will let you understand the psychology. But down when I do that in the master class, when you understand the psychology, all right, the psychology behind why it is like this. Okay, this is what we call the box reversal. All right, so there's a psychology behind it, why it works, so that when you see it, you know how to engage it. All right, and it's very powerful, and you see that it moves price to this level. So as we are here, you can see that. Oh, sorry, it will draw another one. Let me move it. So as you are here, you can see that price is stalling. Okay, you can see that price is what is consolidating. So we price may come to test this one or it may go up, but we are looking, okay, at what price will do. But these are very big prices. So if you want to trade here, you can drop to the 1 hour. If you let's say today maybe you wanted to trade, okay, you can drop to the 1 hour time frame and you can decide that you will draw your support and resistance over there, okay, to be able to help you to trade. Okay, so as you can see that there's one here, okay, that you can draw, and this is a support, okay. You can see one here, you can draw because touches here, touches here, touches here, touches there. So you can draw. So if you're on a weekly, you don't just be on a weekly because you say on a weekly. When you want to trade smaller time, you can't be waiting. Then you wait for days before the price will come. But you want to trade now. So you have to draw what is relevant for you today. So that's what I'm showing you. All right. So you draw that. Okay. Then maybe I'll look for another one, which is here. You can see that price reacted here. Okay. There's a reaction here. All right. Yes. So I'll draw, but this one will be a resistance. So let me make it, let me make it green. Sorry, red. All right. And you can see the price is reacting over there. Okay, so on the 1 hour time frame, okay, you see that I have another support and resistance. So I'm waiting for price to come and test something here or maybe react from here. Okay, as it has reacted, then I can play within this. Okay, and you can go further to 30 minutes and continue to be drawing. Okay, and that's how, and this every day you have to draw. Okay, that's why I present the better way, which is the Camarilla equation, that you don't have to. All right, that to give you powerful levels. But this is the traditional one, and it works. As I'm doing it, you see that it works. When price gets there, it reacts. Okay, so this was a support, a resistance. When price got there again, it reacted, and you can sell as you are targeting down here. So let's go to the 5 minutes or the 50 minutes if you want to trade. So this will be your entry that you are trading. So when you come here, you are concentrated on where prices at the moment. You don't concentrate yourself with the other ones. Okay. So you are here and you are seeing how price is reacting. So as I'm here, if I'm trading today, all right, today's on the 16th, as I'm trading today, I'm waiting to see how price will react even to as tomorrow as we are going to the market. Okay. Maybe price will come and react here. Then if it leaves a rejection, like the way it's left a rejection here, okay, then I can sell it and target here, okay. So that is the normal support and resistance that we have, and that is how to identify value, all right. That's how to identify the traditional value when you are trading, okay. So it's a good thing to understand this basic market basic market concepts of support and resistance because it will go a long way to help you to understand price movement. Okay. And in the other video, I showed you when some a price is bullish and when the price is bearish. Okay. So at this moment, you can see that this is a bullish trend. So when it's a bullish trend, you are waiting for price to react to a support for you to move. Like today, okay, you see that the price reacted to this support and it moved. All right. So that's should be your play when you are trading. So trade safe and please subscribe to my YouTube channel because I'll be dropping more content there, and like and follow for more trading content. All right. So thank you and see you.